He's a cosigner. But the rather amazing thing is, just as soon as this cosigner signs the papers, does this banker care what this teenage son does?
No. Not at all.
Not at all. Why not?
Because he's cosigned, he's covered.
Because the cosigner is going to pay regardless of whether or not the teenage son goes to college. Isn't that right? All right, now, let's bring this right down to reality. We're going to change a few things. The bank's name is the FRB, Federal Reserve Bank. The borrower, or the teenage son, is Congress. And they have a temporary job. It's only a few short years, right? They can't be expected to pay back anything they borrow, and therefore they have a cosigner. And guess who the cosigner is?
Taxpayers.
The taxpayers. Now, this is all well and good, except that any good bank wants to be able to have, be able to make sure they have a good, surefire way of collecting the funds. So what they have done is they have employed a collection agency right here. And I'll bet you'll never guess who that collection agency is.
IRS.
Ah, there you go, the IRS. Now let's go back to the endorsement stamp that we read, and let's read the first two lines on that endorsement stamp. Dave, would you read that for us?
Pay any FRB branch.
Pay any FRB branch, right here. Then what are they going to do with the money? Go ahead.
For credit, U.S. Treasury.
For credit, U.S. Treasury. Are they going to give the money to the U.S. Treasury? No. No. They're just going to give credit to the U.S. Treasury. Why don't they give the money to the U.S. Treasury? Simply because the U.S. Treasury has borrowed money from where? The Federal Reserve Bank. And the Congress owes that money to the U.S. Treasury. I mean, the Congress owes the money, excuse me, Congress owes the money to the Federal Reserve Bank. Now, you know as well as I do that every year the federal government goes broke. And when the federal government goes broke, both houses and the president come together and they determine how much money Congress can borrow. They establish a ceiling, and then Congress says, or as soon as the president agrees to that, then Congress goes out and borrows that money. It is rather interesting that although we are constantly paying taxes and is being collected by the IRS, that we never quite pay back the previous bill because some of that is added to the principal and the principal continues to increase. So it's never paid back. Ladies and gentlemen, it is a fact that not a single penny of your tax money collected by the Internal Revenue Service ever gets to the functioning of the federal government. But you see, the federal government has other ways of collecting money. According to the Constitution of the United States, the federal government has the ability to collect money. In Section 8 of the Constitution of the United States, it says, Congress shall have the power to lay and collect taxes, duties, imposts, and excises, to pay the debts and provide for the common defense and general welfare of the United States. But all duties, imposts, excises shall be uniform throughout the United States. Now we're talking about three different ways that the Constitution of the United States has given Congress to collect money. We're talking about import, we're talking about export, and we're talking about excise taxes. I don't have to explain import taxes, right? That's anything across, any commodity across a international border. The federal government has the right to that. I don't have to explain excise or export taxes either, because that's any duties or anything that goes across the border the other way. But we need to understand excise taxes. What are excise taxes? Well, according to the Reader's Digest just a year or so ago, it made the statement that when you buy a loaf of bread, you're paying about 83 excise taxes. when you buy a pair of shoes, you're paying a dozen excise taxes. Every gallon of gasoline that you purchase has about 17 cents of federal excise taxes. And in fact, the federal government today is collecting about $500 billion in legitimate and legal taxes. And do you know that $500 billion is all the money that the federal government actually needs if they didn't have to pay the interest to the Federal Reserve Board? In other words, the question is, do we need a tax, an income tax? And the answer is no. Let me show you something here. Suppose we are paying taxes on $1,000. If we're paying income taxes on $1,000, we are going to pay how much?
$150 minimum.
How about $300 on every $1,000 earned? Is that right? About 30%?
It's the 28%
Okay.
federal, 7% state.
Okay. Now, let's subtract that, and we come up with $700 spendable. And keep in mind that most of us, this $300 is taken out before we have the option to do anything with it. In other words, it's taken or it's withheld from our place of business, which means we only have about $700 spendable out of every $1,000 that's earned. Well, now, you talk to economists, and they'll tell you that any dollar that's left in circulation is factored by 5 times, which means that if you earn some money and you spend the money, then the grocery man will use that money to buy gasoline, and the service station will use that money to buy something else, and by the time it finishes its circulation, it has been factored by 5 times. Well, now, if we take this money right here that we're paying in federal income taxes, and we factor it by 5 times, we have $1,500 of increased income. We already have $700, and what we have now is $2,200, or an equivalent of doubling our income by simply not paying federal income taxes. Now, if you had double your income, what would you do with that increased spendable? Spend it. If you had an increased spendable of double your income and you spend it, what would happen to the excise taxes?
They would go up.
They would go up. Those are legitimate taxes. Now, you're going to hear some of the politicians today say, let's get rid of the IRS, a 30% tax, and let's come back with a 16% federal sales tax. Ladies and gentlemen, that's like patting a criminal on the back saying, thank you very much for stealing from me for the last 50 years. Now we're going to reward you by a legitimate way of stealing from us. In other words, we don't need a substitute for our federal tax. That in fact, if we actually got rid of the federal income tax legitimately and legally, we would have an increased spendable, and our government would be able to function even that much better. What I like to do is I like to point out that the Internal Revenue Service is not part of the federal government. I have here, and in fact they don't even claim to be part of the federal government. Now there's several ways that we can find out if the IRS is part of the federal government. One way is to look at their publications. I have here 2 publications. I'm going to use these 2 because these are the ones that you receive in the mail. This is your rights as a taxpayer. Notice it doesn't say your rights as a citizen of the United States. It says your rights as a taxpayer. Okay, Dave, I'm going to submit to you that piece of paper. And this one is the Privacy Act Paper Reduction Notice. And I'm going to submit this to you. All right, Dave, where does your piece of paper come from?
Department of the Treasury, Internal Revenue Service.
Department of